Across the board gained Wednesday after Fed Chair Jerome Powell said that the central bank will dial back rate hikes that have put pressure on markets. The S&P 500 has ended a three-day losing streak while the Dow jumped 700 points. Powell warned that the central bank will stick to a cautious approach for a while as it works on inflation. GDP is now improving, with the U.S. expanding just under 3% in the third quarter. Signs of a recession have mostly faded. A decline in the trade deficit has been a significant factor in the GDP increase. Consumer spending is also up as a main driver of the United States economy. Hey, it is the holidays. This comes as the housing market has taken a hit due to interest rate hikes. Now, for more on the state of the economy, let's bring in an economist, someone that knows more about it than myself. We welcome in Mitch Roschelle, an economist and the founding partner of Macro Trends Advisors. Mitch, thanks for joining us.
Good morning, Mitch.
Let me ask you about this. Record numbers on Black Friday, record numbers on Cyber Monday, GDP growth, almost 3% year over year. All of these economic indicators are good. And we were hearing before the election that the economy was in a tailspin. So what do you make of this? Are we in good shape, or is this a mirage?
Well, you mentioned the Fed coming into the break, and I think the Fed, the reason why the market was up, as you noted, was that the Fed said that they're going to dial back some of their interest rate raises just a little bit. They're going to raise a half a point as opposed to 3/4 of a point. But let's remember what the Fed's trying to do. They're trying to cool down the economy, and they're actually trying to slow GDP growth, and they're going to try to slow down the consumer spending. So I don't think we're out of the woods. But what frightens me right now the most about the consumer, which drives roughly, almost as much as 3/4 of our economy, is that they're borrowing everything. So this isn't like, last year's Christmas, where people were awash with savings and were spending because they had pent up demand and all the savings. What they're doing is they're putting it on a credit card. So it's, buy now, pay later, or maybe not pay at all. And that's the thing that frightens me about the continued ability of the consumer to push the economy forward.
So maybe the hammer comes down in January after people have paid for their Christmas and Hanukkah gifts, and they look at their bill and they go, uh-oh, and then we have problems. Is that kind of what you're expecting?
Yeah, and I think what happens is it comes a point where, and there's a couple of things. There's a lot of uncertainty out there, so there's a lot of retail therapy going on, which is good for business, and it's certainly good for the economy. But I think when the bills come in and people at considerably higher interest rates than they were a year ago, and people start dialing back consuming in 2023, I think there's a looming chance of a recession in 2023.
I think that makes sense, but I do wonder, right now at this point, you have to go pretty far down the list of economic indicators to find one that is worrying. I mean, if you go past GDP, if you go past consumer confidence, consumer spending, maybe around housing is where you see some issues, but most of the indicators right now are good, and that was certainly not the case over the summer.
Yeah, and maybe it's my vantage point where, and listen, the Fed is data dependent, so they're doing exactly, Mitch, what you said. But from where I sit, I look at, a lot of issues, and the rail strike is one of those things that's showing me a potential issue. It's a threat to the supply chain, and the supply chain's been something that's been holding back our economy. But moreover, why is it happening? Because rail workers want higher wages because their cost of living has gone up considerably and they want to make more. They're not alone. So we potentially find ourselves in this vicious cycle of employers having to pay their employees more so their employees can make ends meet. And if we're paying our employees more and higher wages are embedded in our economy, well, what does that mean? That means that there's probably higher prices.
Thanks for watching. Go to newsnationnow.com to find NewsNation in your cable lineup. And don't forget to click the red subscribe button below to get more of NewsNation's fact-based, unbiased coverage.